All right, hello everyone, and welcome to tonight's Q&A on the 27th of January. All right, hopefully, can I just have confirmation you can hear me okay? Can someone just say g'day, or I'll pop it in the chat room, please, just to make sure that we're all good. Yes, great. All right, welcome everyone. Yeah, thank you for attending. We've got a few, we've got people coming in a little bit late because the different times have thrown everybody. That's all right. We'll get there. 8 o'clock Thursdays is generally when we're on the Q&A. So put that in your diary because it's always the same time moving forward. So yeah, we've seen some really, really good movements again from last night's webinar. So for everyone who joined the webinar last night, you would have seen that a lot of the levels that we were talking about actually got hit and broken, which is quite surprising because the Fed didn't really do anything to help anybody out, did they? They certainly are sticking to their guns. And look, as they probably should, in the end, interest rates have to go up eventually, and it's probably better that we feel the pain and let the market, absorb it all. Really, it already knew it was coming. This is really just a very big overreaction, as we know. So all we're going to do is work with it, but we're going to definitely go through some of the key indices, some stocks. We'll look at some currency pairs as well. We'll look at the dollar index and see if we can find any opportunities, because now we're starting to approach the levels where you'd say, well, although we've got the volatility, there are some setups happening, especially in the currency space, where you could definitely say it's worth a trade. All right, so let's jump in. We'll do a very quick analysis, and then we'll go to some live questions. If you have any questions along the way, be sure to ask them. You can ask them on your microphone, or you can chat them into, put them in the chat window as well. So as you can still see, I've still got my croaky voice from last night. So we'll get through as much as we can in this Q&A today, and hopefully we'll be able to get some people to talk as well, which will be good. We'll get this voice recovered. All right, let's start out with the Aussie USD. So, it definitely tried to break that zone from the level that we were talking about yesterday. It's broken down below it now, no question about that. It's still at a very funny place in that it's still at the high 70s, nearly 71. The target here is a 70 cent. There's no question about that. If it gets a close and starts to look a little bit ugly, and we get even a remote close below 70.80 would be enough for me. It just doesn't have to close at a new low. If we get a close on this 70.80 or below, that really opens up that trade all the way down to the 70 cent mark. So a really, really good scalp there. I think that we've got a good opportunity to capture that. I mean, when you look at it, like I said, we've been talking about every one of these levels, and as you know, we know we're very, it's very, very easy to look at it in hindsight. But as you know, we've been talking about all of these key levels every time there was one of these setting up, and then you look at it now and you say to yourself, well, that was pretty damn obvious, wasn't it? I mean, obviously the evening star setup was pretty good. That big rejection candle was the one that I really liked, and I think that was the one that probably gave us the best trading opportunity. So realistically, although if you're not already in the Aussie or you haven't already shorted it, the big opportunity was actually that one, especially when we had that close. If you didn't get that candle exactly, this one here was the entry candle, no question about that. So once you get a close like that, and you've got the confirmed pattern, and you're trading well below the moving average again, it's almost doomed. And again, when you plan it like that, like it's like I said, you're not always going to get the exact entry point, because depending on where you are in the world, of course, what time you're doing your trading, all of those things factor into whether you're going to get the correct entry point. But the good thing about the daily charts is, they close effectively at the same time nearly every day. And even if you are a little bit late to the party, you can have a look and see how it closed, and the next day still gave you several opportunities, right? So you go to the smaller time frames, like we always do, and you can see that every one of them off that high was basically pulling down, giving us the opportunities to get involved in the short. The pullbacks of the 20 moving average were all there, and they were all really, really important. So hopefully you're able to capture that, because I think that was a really significant candle, and it gave us some really, really good entry points. Now, where it goes from here, like I said, a close below the 70.80 would be enough for me to re-enter this trade and look for the 70 cent mark of the scalp. No worries about that. Even if it pulls back now to the 20 moving average, I'd still almost cop that. It hasn't been really violent in the way it's gone down. It's been fairly orderly, really, like a lot of the currency pairs have. They haven't really had the same volatility that obviously the indices have and the stock market has. So, to me, these are still very tradable, especially now that a lot of the noise is getting out of the way. And that's why I think if we get that close below the 70.80, I think we know that decision's already been made about where this is probably heading, and I think that's actually a good thing. It reached a low today that hasn't reached in quite some time. since November. Okay, so we can see here in November of last year, that was the last time it was down lower than this. So it had a very, very strong few months, and that was a catalyst for it. Now, if it actually closes higher again and causes that hammer candle, a bit like the weekly candles that we were talking about at the webinar, that's going to tell a very, very different story. But also, it also gives you another opportunity to go long, because I think that although the short looks really good to the 70, I think we've got a really good longing opportunity from here as well if the candle actually closes above it. So look for the hammer. If the hammer gives us the trading that we want, we can trade it up to the 20 moving average in the first instance, which is about 60 or 70 pips up, or we can look to push past those moving averages and aim for these highs again. In the first instance, I'd be probably going for the moving average, because at the moment we can see that we've still got the weakness. We'll go to the dollar index in a minute, so we'll see what the dollar index is doing to a lot of these pairs. But to me, there are two trades here. The 70-80 close would make me go to short, and of course the opposite side of that, a close above here or even around this area. If it gives us a big hammer candle at this level, it's a big rejection zone. We know it's a very strong support level here, and that gives us another big inclination that it's probably going to reverse and go up. To the very least, it's going to go up to the 20, which is around that 71.80, and then that's if it does it quick enough, of course, on this candle, and failing that, if it pushes past the 20 moving average, we're starting to target these levels here. Is where we are starting to aim for. So pretty good trading on the Aussie USD. Welcome, Dave. You got your microphone today, mate? I can see you've jumped in. Hopefully you have. All right, let's go over to the US dollar CAD. This one has really started to launch up. It did all the things that we wanted it to do. Obviously, we talked about this level here, very, very important. Pushed up higher. This is looking a little bit less nice. I don't really, it's not as clean as some of the others. You'll see a clean trade in a minute when we go to the US dollar yen. It's projected a little bit off it, but it did make a new high. So, for me, making a new high and reversing back is not quite enough. It needs to come back a little bit more, at least to come back up a little bit more and actually close above this level here. So if we get a close above the previous level of 127 pretty much on the dot, I would be very, very happy to keep going along on this one and start pushing it up to the 28s. But it needs to do that. I wouldn't want it to reject here and close below this level, because that's a sign of a weakening sort of move, and the momentum starting to shift a little bit. So then we're looking for probably a retrace back down to the 20 moving average. Not bad trading on it. I think it's got a lot of work to do to go down short. So in regard to where this one may or may not go, I think it's going to determine the action of where it closes on this daily candle. I would like to see, personally, I'd like to see it go up, because I think that's where the strength is. The dollar strength is quite good. So that being said, if the dollar strength continues up, I would think this is probably a 128 waiting to happen, and it can happen very quickly, but it needs to start at around this candle here. Okay, we'll go. This one's a lot cleaner. So, and when I say clean, you can see that the candles are big and long and fulfilled. We haven't got very much wick action. Very, very big difference to what it looked like yesterday. As you can see, we've had a big rise up. It's closed above the moving averages, which is really, really important, and it's already got up to 115. That's how fast these can move. So, your entry point was once one closed, of course. So, you had a reasonable amount of movement. Like, it still gave you a 40 pip scalp if you wanted it to. And has it got more to go? Well, look, it's looking strong. If you go to the 4 hour, you can see that we've had a very, very big boost up. You can see the lightning bolt we were talking about. Moving average crossover about to happen. The 20 and the 50 aren't very far away from crossing. They'll pretty much close on the next candle. Aside from this little mini roll reversal zone at the 115, it's probably not strong enough to hold it. If the momentum continues, you can see we've got massive MACD power on the 4 hour. So if this continues and gets a close above this level here, it really opens itself up to around that 115.50 and 116 in particular. This is where we'd be targeting on a reasonable move up. But in the first instance, probably 50 pips. And I think that would get us a reasonable move. So really, really good trading on this one. I really like it. Dollar index, okay, this is the one that's really dominating everything. It's hit resistance now, no question about that, but it's looking a hell of a lot more healthy than it did yesterday when we were talking about it at the webinar. Even though it was looking strong yesterday, it actually went on and did the job, which is the most important thing, of course. MACD, like I mentioned yesterday, is up above at the 0, so we know we've got plenty of power in that direction. The only thing that concerns me just a little bit, well, more than a little bit, because it is there. Resistance is always important, but I think that the volatility may well override that resistance, but it's there, okay, right on it. So if you weren't already, I mean, at the end of the day, this is what I was targeting, right? Like when I was talking yesterday, the 96, 60 to 70 area was where I actually wanted it to go, and I shorted the euro. I didn't long the dollar index, but I knew that if this had broken out, the euro was effectively doomed from where it was. So now it has definitely hit that level, but it's going to correspond, of course, with around a 112 euro, which we know is going to be a very, very similar move. So this, you got to trade with caution now. I'm not really looking forward to trying to short it, mainly because this resistance now is right for the breaking. There's a very, very big chance that it may well get broken because there's enough volatility in the market to push it up, right? So the euro, I'll go to that now. So the euro at 112, which is effectively where it is now, is a very, very strong support zone, historically very, very strong. You can see here right through all of this level here. Look at all that support right through there, resistance through there. This is a weekly chart, remember, so these are very, very serious candles. Big resistance and support all the way through. So 112 is a very, very important zone for it. And as you can see, even on the dollar index, when you go out to a weekly, you know that this level is a very strong level as well. Obviously, you can see all that support and resistance right through there, which is all very, very important. So that's why I say when it's at a very, very key zone, and it came back and touched the 20 moving average perfectly and the 200 moving average. It was a perfect reload zone 2 weeks ago. This was a really, really good move, basically effectively shorting the euro from around 115. I caught the move when this one started to move on the 4 hour. Which is, you can see, I like this one because it gave us so many opportunities, and really when it did that little mini movement here up to the 20 moving average and started to show the weakness, it was all but doomed. And once it broke that level, if you went to the smaller time frame, I just so happened to be awake, so I was able to catch it. But this is what we were looking for. Once it did that, that 50 pips was a very, very easy 50 pips. Like I mentioned yesterday at the webinar, it's very, very unusual if that had to stop before it got to the 112. Okay, so very, very easy trade. But if you weren't in it and you haven't got it, it's a different story now because it is at the 112, and we know that's a very, very strong support. So what we're looking for now, I'm happy to play this game on the euro because it's a really good scalping instrument. So I would go, we know that our support is right here, so I'll put the level there. We know it's historically extraordinarily strong on the bigger time frames. So you're going to go down to the smaller time frames and look for a reversal. You're certainly not just going to go long. I wouldn't be doing that until I've got the momentum switch. So we're looking for a lightning bolt move to get up. All right, and that could be in the form of a double bottom. It could be an inverse head and shoulders, perhaps. We could even see just a handful of rejection candles, and that's all it will take. If we get that on one of the smaller time frames, I wouldn't go any lower than an hour though on this one, because I think the upward movement is enough to warrant the trade. So if we move up from here and we get basically a pattern of a lightning bolt up or a double bottom or a candle, even like an engulfing pattern, anything like that, any signal that the market's turning around momentum wise, we can start longing this back up to, in the first instance, around the 112.80 area, which is this level here. Okay, that's the first point that I'd be looking for a reversal to, but it's going to take a pretty strong bounce off this level. I could see it probably hovering around this level here for a little while, maybe meandering up to the 20 moving average. Not really enough pips for me. If you're a really aggressive scalper, you could probably capture that. But for me, that's not quite enough pips really to get to that level and say that's a good trade long. So I would be going a little bit more aggressive and wait for it to actually lightning bolt properly and go around to that 112.80. Okay, and that would see a pullback on the dollar index, of course, to a level that we would say is good enough to pull back, and that would probably be around that 20 moving average. So a pullback down to the 20 moving average would make a lot of sense. That would be as far as I would want to take it though. I would be, that's an absolute counter trend scalp, because there's no question this is in a downtrend. It's in a downtrend at any time frame that you want to look at, okay? And now it's looking very, very ominous. So if we do scalp it, we're only scalping it for the counter trend, and then I'd be looking for a reversal around those levels, which could provide quite a good reversal. So good trading on the euro. Dave, I see you're there. Did you catch the euro at all? Did you do that one short?
No, I missed it completely, Ty. I had an alert on it, but I was downtown, so just the way it goes.
Yeah, okay, yeah. It looks like, and it was, the markets were moving very quick too, So I mean, at the end of the day, if you weren't there and actively trading, you could have easily missed it. And you look at it now and you say, wow, I don't know how, but it did happen very, very fast. And whether the action, I mean, look, the good thing is now the market's got a day or two this week to digest all of the information that's come out, and it can make a decision. The big money will make a decision as to which way it's going to go. Now, if we see further weakness in the stock market, you could probably assume that the dollar index is going to go up even further, which is going to push the euro down past this level. But we're not going to really. I don't really want to try and preempt that. I think we want to trade what we see. Obviously, that's what we try to do all the time. So, what I see now is support, and that was always going to be a target. If you did short the euro from anywhere through these levels or even on the break, and you didn't take some profit at the 112, you're being very brave. And like I said, I mean, you can have a longer term view and a longer term plan, but if you're trading, that is definitely an area where you certainly would have taken some profit, no question about that, if not all of it. Okay, so it's definitely what you want to be trying to do. Let's have a look at our index first. We'll go to the ASX 200. We saw a low down to basically touched the 6750 right on the dot. It happened and it sort of hovered there for a little bit. I mean, if you go to the lower time frames, you can see that we got down there and we played around there for a little bit throughout today. It's had a bit of a rebound now on the 1 hour. Now, look, it's one of those ones now. Like I said yesterday, the 6750 and 6850 levels on this particular one are a very, very strong zone. And these are, when the market starts to move like this is where you have to start going to the very big time frames, because I haven't been to these levels in quite some time, right? So we definitely want to be looking at these levels with a lot of interest, because we don't expect it's going to go blasting through there and complete and just keep going, right? We're always going to see some sort of a reaction. Now, like I said yesterday, the most important candle is going to be the weekly candle on all of these indices. So we've got now a US session tonight, which may rebound a little bit more. We already see a little bit of a pickup. We can see that we're getting some pretty strong movement throughout the session. So we can definitely see that the market is starting to pick up a little bit. How this closes on Saturday is going to be all telling, because if we get a close below this level here on the ASX 200, you can probably bet your bottom dollar it's going to be a very weak, ordinary week next week, and you're going to see potential moves all the way down to the 66 again. And as much as that's going to send some more shockwaves through the market, because this has already been a pretty significant pullback, and albeit from effectively all-time highs on both markets, really, even the US market, it is still significant, and it doesn't take a lot for the panic to set in. Now, we know it's all about the interest rates, right? Everybody knows that. The market also knew that the interest rates were coming, but if they don't do it now, I'm not overly fussed, in a sense that they've done it this early in the year, or they've made the announcements of their plan for the year this early, because it's going to give the market time to digest it nice and early in the year, and probably spend the rest of it trying to pick up. And at the end of the day, they were always going to go up. They couldn't stay where they were. Is it going to cause some issues in the housing sector if they start pushing up interest rates? Obviously. But these things have to happen, so they might as well actually, bite the bullet and do it early. If this is the worst that we're going to get, if this is the biggest reaction we're going to get because of this news, and then when the interest rates actually start to happen throughout the year, the market actually reacts positively because it's already factored all that in, then that's actually going to provide a good trading environment for us, really, because what we want to see as traders, as you know, we want to see steady markets. We don't really want to see what's happened this week. Ideally, we want to see a market that's moving nice and fluently. So if we get the shock and awe out of the way early, the rest of the year is going to spend, be spent going up and down in a very orderly fashion, which means that we can actually take advantage of that and actually be able to trade as part of it, which is obviously the important thing. So very, very important that we don't panic, obviously, and there's no need to panic. I mean, if you're trading properly, you shouldn't be risking more than 1% anyway. So any move should never have cost you more than your risk ratio anyway. So that's the number one rule. But some people get a little bit caught out by that rule where they place a few too many trades. So they'll do a 1% rule, but they might have 15 trades open. And quite often, a lot of those trades are going the wrong way around, all the same way, sorry. So when they go wrong, they all go wrong. What you definitely want to be mindful of, and for all of you who have done the course, you'd know this, obviously, because we talk about the variations on how we like to break down diversification of different sectors to make sure that you're not caught in one direction or another. What you want to be doing is definitely, I don't like, even as a rule, and I don't go too bad at trading. Obviously we do it for a living, so we still do not trade more than 5% risk at any given time in any of the accounts. Okay, so even and that may be 10 trades at 0.5%, or it might be 5 trades at 1%. But even with the big accounts, we never trade more than 5% absolute exposure risk, even with good diversification. Okay, so if we're doing that and we're pretty reasonable at what we do, that should probably tell you that if you're doing more than that, you might be maybe risking a little bit too much, because in an event like this where the market goes a little bit haywire, quite often you're going to see a reaction right across the board, and sometimes that reaction can really wipe out. You don't want to be dropping 15% on your portfolio. That's like nightmare material. That's the last thing you want to be seeing, because it makes it very, very difficult to recover from. You should never be in that position. So even 5% is ugly, but at least that's an absolute cap, and you can walk away and say, you know what, let the market settle down, and you can get back involved. So that's what you definitely want to be seeing. Did anybody short the ASX 200, just out of curiosity? Kilted, I see you're there. Did you get a short in there, mate? If you got your microphone on there.
Yeah.
You did? Which indices did you short?
It was the ASX 200.
Just the ASX. Did you have a crack at any of the others as well?
Yes. I've been shorting the DAX as well.
Okay, yep.
Yeah, and I shorted the NASDAQ. That's probably my best one.
All right, and are you out of them now?
Yeah.
Okay, perfect. The NAS, what time frame would be the best one to describe it? Because I might get you to talk everybody through what you did here. Mainly to give my voice just a 1 minute break. Sorry.
Well,
tell me what time frame you want.
Let me see. I need to go back a fair bit. I think it was quite low. I traded it on divergence, so I saw the divergence and took it short. I should have stayed in it longer, because I was seeing it down to 14,000. I actually called it in the room. I think I actually posted some chaps in the room.
I think you did yesterday, didn't you? Yeah. Yep. Yeah. Will you tell me which time frame you'd like to see, and I'll get it for you.
Yeah, hold on. I'll go back and see what time I did it. Just bear with me a wee sec.
Yep.
Let me get the chart up, actually.
That's cool. It's good to get another perspective of how we approach these shorts, because I know we talked about them to death yesterday. So yeah, that's really good.
Yeah, when I saw the daily was right up at the sort of demand, it went up and retested it. That was on the, this is going back a bit. 3rd of January, I started to get interested when it topped out.
All right. Okay. Yep.
And there was that big divergent candle on the, what day was that? Yeah, that was the 4th.
On the 4th of January?
Interested in this. Yeah.
That's that one there. Yep. That candle there.
Divergence on the OSMA.
Yep.
So it was just hump to hump, and then it dipped under the 0, and I was like, right, we're going. We're off.
Yeah, this one. I mean, I thought this one here was just a great entry. I mean, that was a good entry too. But this one here, if you missed the initial one, it was here that we were talking about it. Like, yeah, right through this area here, it was like this is the pullback that you're waiting for because it
Yeah.
was starting to look weak. There's no, I mean, no one should be surprised that the market did this, right? Like, we were talking about it last year. I know a lot of people, a lot of the big experts were calling 5,000 and 20,000 on the Nasdaq and blah 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 blah. That's all talk. They don't really know. At the end of the day, numbers have to actually back up what the company's doing. You can't pull a number out of the sky and say the index is going to go. Like a lot of people are saying, our index is going to go. The Aussie index is going to go to 8,500 by the end of the year. And I heard it on some of the news channels, and I'm like, they're calling an 8,500 market now. I mean, that's just throwing numbers in the air. Like you have to have a stock market that actually warrants that. The ASX 200 is made up of the top 200 companies. It goes up only when those 200 companies are actually performing in a
While we're waiting for Ty to get his sound back, is it all right if we just talk about the conference?
Sure can.
Yep.
Yep. All right. Okay. Dave and I are going on a trip out in the boat. Not this Friday, not tomorrow, but the following Friday. So we're going to go out and check it out, which is really good. And it's really exciting. Like the boats can hold 150 people. And so we've hired the whole boat. And so however many people end up coming along, that's it. So there'll be no other people on the boats, which is really good. So that'll be good for COVID, but good just for us because then we can do what we want. And really excited about that. It includes our lunch and everything. And there'll be drinks there. We have a price list. Everyone will have to buy their drinks. And it'll be swimming, snorkeling. I think we go to 2 different outer reefs. Are you back, Ty?
I am back. Can you hear me okay?
Yeah, I can hear you now. We just took over because waiting for you. But anyway, I'll go now.
Yeah, awesome. Thank you for that. We've got like, I'm not sure where it's like anywhere else in Australia at the moment, but we are getting literally lightning storms right through Victoria at the moment, and the power just cut out in Ocean Grove, which is not unusual, but we've had apparently over 1,000 lightning strikes in the last few hours. And it's cutting the power in and out. So I apologize for that. So hopefully you can hear me okay now. But yeah, we are in the middle of a very, very big lightning storm. So if the power cuts out again, you'll know why, but I'll definitely try and join. Amanda, do you want to just continue where you're at? Sorry, and I'll come back to the NASDAQ.
I was really just talking about Dave and I going out in the boat. And
oh, nice. Okay.
Yeah, and just saying that we're going to check it all out. But I was just saying that lunch is provided. There'll be a price list for drinks. We can do, if you want to do a helicopter ride, I think it's $230 for a helicopter ride flight for 20 minutes. And also there's diving. Anyway, I just encourage everybody, if you are able to make it, it's really going to be a fantastic time. I'll shut up now.
Yeah, no, thank you. It's going to be an awesome time. But back to where we were on the NASDAQ. Yeah, look, the opportunities were basically all the way down. Really good opportunities. Kilted killed it. He's been shorting it all year, which is great. Now, like I say, it's going to be one of those ones now where we can see we're getting a little bit of a pullback. We've got a base here. There's no question about that. We'll go to the daily. We'll take it right out, actually. Just let me zoom it out. If it was going to stop, this is the level that's going to stop at, okay? There's no two ways about it. You don't have to be a trading. Yep.
You've got the wrong, we can't see the picture moving. We must have your old picture if a different login.
Oh, okay. Yeah, because hang on a second. I'll share screen and hopefully this will work. Because now I've come through the back entrance into it now, so it's yeah, I'm kind of one of everybody else. Can everybody see that now? Can you see that, Amanda? Can you see my screen?
Yeah.
Awesome.
Yes.
All right. Great. All right. So, you know, with this one here, like I said, the 4 hour, you can see I'll go back to the 4 hour. I'll talk about it again. You can see that we had many opportunities to get in over the last little bit. Well, you can hear the thunder in the background. I'm not sure if you can hear that, but it's rattling the office. Many opportunities to get in, but now it's found its base. Okay, so well, what we think is going to be a base, if it doesn't find and hold at this level here, this is in trouble. You know, if it doesn't hold at this level and breaks and closes below it, you know, we're probably looking at maybe a 13,000 again. So we're looking at a solid 1,000-point move on this one. And although that sounds, you know, quite extreme, we've already moved, you know, down, you know, 2,500 in a very quick space of time. So I don't want to see that, you know, because that, like, again, that leads to that uncertainty that we don't really want. What I like about the NAS though is that if we do get a reversal at this point here, we've got a very good support zone to push it up. Yeah, this roll reversal is pretty sexy, really. So if we get any form of, for me though, this has been such an aggressive drop that it's going to take a 4 hour change of trend to convince me that we're going to continue up. So on what we want to see here is either a double bottom, inverse head and shoulders, but at the very least a lightning bolt. Okay, we want to see a lightning bolt with a break above the 20 moving average, and then that really opens itself up to a really big move. Like the good thing about this is you've got very solid moves. Now, from an investment standpoint, if you're looking at this, you'd say, well, is it a great place to actually jump in and you know, go from here as an investment? If you're looking at building a longer term hold portfolio and you're happy to hold your positions for extended periods of time, this is one of those levels where you'd say, all right, not a bad entry point. You've got plenty of average down opportunities at very good support. So, you know, I wouldn't have gone here. I know people were bullish at 15, but for me, that wasn't a big enough pullback. I know that, yeah, there was resistance there, but it was only shallow. It was only a couple of touches, and yeah, that scared me just a little bit. I wasn't very confident at this level. I was more confident at the 200, but it blasted through that as well. Only one test and down it came. So, you know, I'm a little bit more confident at this level here, mainly because it makes a bit more sense. You know, if you can see that we've had the pullback that, you know, everybody's been promising. But if it fails here and closes below this level here, you know, the 113 or the 13,000 is where, you know, it's more than likely going to go, and that's what I would certainly be aiming for. And again, at that level, we start to play the same game. We start to look for the change of trend. So, you know, I wouldn't be just going along here for the sake of it. I would be waiting for that change of trend. If we get that on a 4 hour at the very least, I wouldn't take a 1 hour. I need a 4 hour on this one. And that's purely because the fall has been so sharp. So if you want to know why I flick between 1 hour and 4 hour for a lightning bolt, it just depends on the aggressiveness of the move down. This is a very aggressive move down. Okay, we'll go over to, well, might as well do the S&P 500 while we're here. Exact same thing though, right? We know that we're at that 4,300. The 4,300 is very strong support. We know that. Waiting for the exact same thing. I'm not going to talk too much about this one because it's effectively the same thing. Okay, very big short off now. We want to see a 4 hour change of trend. Lightning bolt up and off we go. Just for due diligence, let's go to we'll go to the 200. I might have already passed it. Hang on. There it is. This is the same story, but this teeters on the edge of danger just a little bit more because it's got a very shallow support zone. This, although it is holding at this point, I think it's only holding because the other ones are. It's not holding because of any significant support. This has got a little bit more to fall. If it pulls back from here, though, I mean, we've got to draw the support because it is technically there, but it's not as good as the support on the other ones. But if one fails, they're all going to fail anyway. So, you know, if we see a reversal on the time frames of the NAS and the S&P 500, this one may well be the better trade because this one's got a bit more cleaner upside. I like the upside that it's got to here. We can get to the 20 moving average probably without a hell of a lot of problems, and it could be just a little bit cleaner to actually trade. So, you know, really, when it comes down to it, the three of them are going to move in the same direction. Really, they're either going to go long or they're going to go short. No big price there. If they do go long, they're going to go long in sync. So really, rather than try to do all of them, try to pick the one that's got the best range of movement without the crap in front of it. And for me, yeah, this is almost the one that I would probably be looking for here. That if it gets up there and closes at that level, I would be looking for either a reversal. I don't know if I'd be pushing longer. I'd be taking my profits absolutely at around this level here, and then waiting for either a breakthrough and then join the trend again, or wait for the reversal, and then we've got a very easy target to aim for on the way down. Not so easy to see when you first breaks through, but when it comes up and retests it, it's a very, very clear zone to aim for. And the market knows that. And yeah, the fact that it actually does know that makes it a very easy trade. Okay, so that is where we're at with that index. Now, let's go to, I know I've got a request here for oil. We'll have a quick look at oil. Oil is doing the job again. Off it goes, launching into the sunset, desperately trying to get to $90. It really, really wants it, as you can see. Look, you know, to me, it still wants to creep up. There's definitely good opportunity for it to do so. The price action indicates that we are all good. So we've just lost light in the office. Okay, if it does drop out, you'll know why, because part of our security, our security switch has gone. The lights are out. I'm actually trading on monitor light now, so half the room is actually out of power. Jesus. All right. Yeah. So what we want to see here is a new high break above here to get involved. If it comes back and tests this level again from above, like it did here, another potential entry point, especially if the 20 moving average catches up, that would be ideal. If we see a pullback down to here and the 20 moving average catches up, that makes it a really, really good reload zone. $90 is well within its sights, and I think it's probably going to try and get there. So realistically, you know, the short looks a hell of a lot harder right now, right? So, you know, to get this down, it's going to have to close below the 85 at the very, very least. And even then, it's got problems straight at 82 and 83, as you can see. So it's got a lot more work to do to go down than it does to go long. So I'm liking the potential pullback to go long on oil. Okay, so hopefully that means that yeah, we're going to get that little bit of a move up. If you've scalped it and you've been involved in this trade, you've done very, very well. So well done to all of those people. It's got a question here: the Fed rate hikes, what they do and what they mean for the Nasdaq. Look, no, when the rate rises actually happen, it probably won't affect the market. The market movement that you're seeing now is actually reactionary and factoring all of that in. So when the rate changes actually take effect, you'll probably find that the market will react positively on them most of the time, because they've already been factored in and effectively priced into the current markets. The reason why rate hikes are bad for business and for obviously for people who've got house loans and everything else, but for business in particular, is when we've got historically low interest rates, businesses are able to borrow money for effectively nothing, invest it into their company, and grow the business. Now, that means, of course, because they're paying nothing for the money that they've got, that they've borrowed, all of the profits that are generated from the borrowed funds are generating profit for the company, right? So the company's making more and more money. Now, when the cost of business goes up, which is what happens when an interest rate rise kicks in, all of a sudden they've got to pay more interest on the money that they've borrowed, which means that's going to affect their profits. So the rate rises directly affect companies' profits. Most of the big companies have extraordinary loans, more zeros than we can count. So even a small rate rise affects their bottom line. So whether it's 0.25% or 0.5%, it effectively does reduce their bottom line and their profit, mainly because of they've got to pay more for the borrowed money, which means their profit's going to come down. Okay, so that's why the stock market generally reacts badly initially to the shock. But in saying that, though, when they do eventually happen, when they actually happen, and when they've already been forecast, for the most part, the market doesn't generally react in a bad way. Normally, it's actually almost positive. You'll find when it does it, because it's already been factored in. We're doing all of that factoring in now. So, okay. So before my power goes out and my voice gives away completely, let me just bring you Amanda. if you could just help me out for 1 minute here, if you're still there. Can you just
Yes.
explain, yeah, I'm not sure how far you got because I wasn't there when you were talking about the boat, but did you explain to everyone that who's coming to the conference that the boat is on the Monday, and to extend your stay, because we're not going to be, it's not going to cost anything extra, of course, it's part of it.
No.
Can you just go through that for me, please?
Yep, I will. Okay. Okay, so the conference is on Saturday and Sunday. On Sunday evening, we've got a dinner, and that's at probably the nicest restaurant in Cairns, so which is really wonderful. Where we're staying is the Novotel, and it's a really, really beautiful place. We've got a really good deal there as well. And Dave will let you know as well, in Cairns, the Novotel probably would have the best pool bar in the place, so which is really good. And so the conference will be Saturday, Sunday. Then part of the conference now will also be the boat trip. That'll be part of the price. The price is not going up. It is as it is. And we'll be going out on the boat. So we'll be leaving, I think it's 8 o'clock in the morning we leave, and we won't be back until about 6 o'clock that night. So we've hired the whole boat out so we can, it's at our beck and call, so which is really wonderful. And then we come back and we'll be tired. Some will want to go out and have cocktails and have a meal. And then on Tuesday is not part of the FX Evolution, but Marianne, she's been the travel agent or the tour person that I've gone through. She's been in the industry in Cairns for over 40 years. She's actually got us really, really good discounts on all other tours. So if people want to stay on longer, like I know Ty is, you can book through her, and she's given us a really good discount on all the other tours. There's golf, fishing, Tom's going fishing, and up the Daintree and everything like that. So there's a lot to do. And also we approached the aquarium. There's a fairly new aquarium in town, and we got a 10% discount for going in there. And we're actually even trying to get a little bit more. We've been a bit cheeky. We're going to call in there on Friday week and talk to them as well. So it's really going to be a great conference. We've got everything's organised, and it's going to be a lot of learning, but there's going to be a lot of fun as well. So that's what I'm really excited about. Actually going to meet Dave. I mean, we're just like a couple of hours away from each other, but we just never get to see each other.
It's always the way here. No, it's going to be great. And I think a lot of the members are going to be able to meet, like a lot of the people are going to be able to meet each other, and you'll be able to put a face to the name. Now, I know that there's people in the room and people who are going to watch the recording, of course, that aren't from Australia and can't come. Don't worry, we are planning on doing the international conference also in 2022. We're just getting this one out of the way before we start planning the next one, but the next one is going to be planned within 6 months of this one finishing. So for a lot of the Americans out there, or Canadians, Stacey, if you're still there, we are going to be able to, we're going to do the Vegas one, travel and everything permitted. So that's going to be awesome. We're very, very excited about that. But we're going to get this one out of the way first. But it is going to be, the international conference is going to be in 2022, travel restrictions pending, of course. But I think we're going to be able to do it. So we are very, very excited about all that. So guys, thank you so much for joining us. Amanda and Kilton and Dave, thanks for helping out. My voice is literally about to completely capitulate. And the internet is, I don't even know how we're running on power, because I've got the exit emergency light on in the office, and all I can see is computers. Like, we've got a backup generator of the computers, but that only has about 10 minutes backup, and the power has not come on. So hopefully you've been able to get some good out of the last couple of days trading. I look forward to seeing you all. I'm going to do a nice early market wrap in the morning to see what transpires tonight, but I think we're going to get some really, really good guide on what's going to happen next week. I think the trends will be well and truly established by then. Our levels will be sorted, because we've got the consolidation that should happen tonight in the US. One way or the other, we're going to see it test the levels or actually start to rebound, which is going to bode really well for next week's trading. Okay, so thank you so much, everyone. I appreciate your time and joining us tonight, and I'll see you in the Discord room and in the rooms tomorrow. Thanks, everyone.